Good morning and welcome to the DecisionPoint trading room. My name is Erin Swenlin. I am not here with my dad this morning. He had an appointment, everything's fine. So I am on my own for the day. So we will be doing quite a bit this next hour. My voice should hold up. I do an hour and a half trading rooms on Friday for DecisionPoint Diamond subscribers. So I'm not too worried. My voice should hold up. The Q&A box is where you're going to put your questions and symbol requests for us, for me. The chat room is for you. I do have a moderator who's in there who will welcome you into the chat room. Go ahead and say hello. It's a great place to get to know some of your fellow traders and see what's on their minds. I am not a registered investment advisor, so all trading decisions are your own. Anything you hear in this trading room or honestly read in our blog should not be considered a call to action. It's for educational purposes. Okay, I think that just about covers it. So let me go and dive right in. I thought we would start today looking at UNG. I've been getting a lot of people asking me, what the heck, what am I supposed to be doing with UNG? I am currently a buy and holder, so I am not really following it as closely anymore because I plan on holding it through whatever it is that's going on right now as prices continue lower and lower. So I thought we would look at the UNG chart and get a sense of what's going on. All right, so this was really about the time that I became involved with UNG. So I'm definitely sitting on a loss, but it's certainly not as bad as it's been. One of the reasons I'm covering it, number one, is somebody said, hey, you just haven't covered it in a long time. But also you can see that some interesting action is going on. Certainly today we're getting a nice move to the upside. It's acting like this is a breakaway gap, but we just can't trust UNG at this point. And one of the reasons I would say that we have to be a little bit careful, I'm going to come back to this chart, but what I want to show you is the NATGAS chart. So it looks very, very similar. Here's the big difference, though, when we go to a weekly chart. So on NATGAS, when we look at the weekly chart, we can see it's trading here near these lows. The problem is it's not at its all-time lows. So NatGas actually could continue lower at this point. We are of the opinion it will not, but we have to know that this is still a 20% decline that is possibly on the agenda for NatGas. So I think this is where we're going to have that turn. And at least when we look at UNG, the daily chart's looking a little bit more constructive. But here is the weekly chart for UNG. So it's a different picture. So when we look at UNG, we had these all-time lows at the time. We got the big push to the upside. It looked like a really good signal. And of course, we failed. And part of that could very well be that NatGas continuous contract is trading lower and lower. We do see on UNG that the PMO, let's get a zoom thumbnail on here so we can see it a little better here. So you can see the weekly PMO on UNG is starting to make a move to at least flatten out. Looks similar to the last time we had the pop. So we're still going to be, cautiously bullish here for UNG. Scooter is still zero. There are no worse ETFs, basically, is what this is telling us. Volume has really petered out. There's a lot of bad things going on the UNG chart, admittedly. So I'm not going to sit here and tell you, oh, this is the perfect time to get in. So we had a little bit of a move to the upside here. We got the crossover buy, and then it failed. It turned the PMO down. We actually ended up, if we get the zoom thumbnail here, we ended up with the PMO turning down. And, we now have a bottom above the signal line on the PMO. That's especially bullish. So these are good signs, but this is with looking at the NatGas continuous contract, I'm not going to sit here and say, yes, this is the time. This is it. Get in, get in. I'm not going to do that, but this is certainly looking much better in that we do have this breakaway and it is above the 20-day EMA currently. So there is some action going on in NATGAS, and we are feeling bullish about it. The PMO is telling me to feel bullish about it. So I'm feeling a little bit better about my losing position in UNG. But I like I said, I don't want to get too bullish here. It does look like a double bottom that's forming. There are a lot of good things on the chart, but NatGas does not look good overall. So there you have it for UNG. Let's dive into the market and see what's going on. I'll start here at our dashboard real quick. As you can see, pretty much all of the major markets are lower right now. The VIX is jumping a little bit here as people get a little bit more nervous, possibly because of what we're seeing as far as prices being lower. Although really the Dow is almost unchanged. The New York Stock Exchange is unchanged, and the S&P 600 is mostly unchanged as well. When we look at the sectors all together here, real estate certainly showing the most strength right now, with comm services and energy holding up in the bottom right now. We'll look at USO. I think that that'll be an interesting chart, seeing that energy is near the bottom today as far as the sectors go. This is my ETF tracker that I keep track of on my homepage for StockCharts. It is available in the DecisionPoint chart packs, which you will find if you go to your account. You'll see where to manage chart packs, but our DP trending condition, I believe, is the one that has our ETF tracker chart list in it if you want to get that. Currently, you can see NatGas, solar are the ones that are leading, palladium also doing well. That is a not recent diamond, but fairly recent diamond. And full disclosure, I do own palladium. We're seeing the interest rate hedge fund also looking pretty good here with rates moving higher. If we go to the bottom and see what is really hurting today so far, it is Bitcoin. Gold miners finally turning back down. Gold is looking a little bit weak, so we'll take a peek at that chart, but that could have an effect on what's happening with gold miners. But let's face it, gold miners have been absolutely outstanding, and they are definitely due for a pullback. All right, so let's go ahead and look at the market here. So here's our 5-minute chart. I'm sorry, our 5-month daily chart. And you can see prices are lower. The thing I noticed last week was the fact that we did end up holding up this rising bottoms trend line. It looks like it's in jeopardy today. We might lose that, but really the stronger of the rising trends is the one drawn out of the March low, and that has not been compromised. It has not even been tested yet. We did hit price levels up here toward that January high, the February high. That could explain why we're seeing a little bit of pullback right now as well. Let's go ahead and look at our Swenlin trading oscillators and the ITBM and ITVM. These are our primary short-term indicators, the Swenlin trading oscillators. The ITBM and ITVM are our intermediate term indicators. And as you can see, on Friday, the STOB was still rising slightly, but the STOV had turned down. So we don't like getting these mixed signals out of our Swenlin trading oscillators. That generally means we're going to be in for some chop, which is what we were in for earlier. The key, though, right now is that our intermediate term indicators have not had a hiccup at all. They continue to rise strongly. So that gives us a nice bearish bias backdrop for what's going on. But we are starting to see some problems. You can see right here how the STOs have declining tops, but price have rising tops. That's a negative divergence. We had negative divergences show up on a lot of our charts yesterday. So here's our short-term indicators, but we added breadth in here, and you can see negative divergences going on there. We don't have any negative divergences on our intermediate term chart yet. We did see them on the new highs, new lows. You have lower new highs, higher highs in price. So we're starting to see some of these, cracks in the foundation of what's going on in the market. So we do need to be aware of that and, enjoy the rally that we've had, but we do also need to be on our toes for a possible pullback like we see back here. We could luck out and just see some chop like we did last time. I'm thinking that if this is truly a new bull market phase, then we will see a consolidation. We're not going to see a big drop. That's if we're in a bull market. If we really never quite got into a good bull market, then that would be a sign if we got a failure here. All right, 10-day moving average of the high-low differential is in near-term overbought territory and trying to turn down, another problem. So while everything still looks pretty healthy in the market and on our indicators, there are these, like I said, cracks in the foundation. And so I would be very cautious and make sure you have your stops in play at this point. Bitcoin, as we saw on our ETF tracker, is the suffering the most today. It really had a nice breakout above some very strong overhead resistance. And we got some consolidation and now it's pulling back. We're getting another little rounded top here, but rounded tops have not been a problem for Bitcoin. Rounded top here, breakout. So I'm not thinking this is going to turn into too much downside, mainly because if you look at a longer term Bitcoin chart, you can see, I know it's an eye test. Let me see if I can get it a little bit bigger. But you can see that this is some major overhead resistance that was broken on that last move upward. And notice the pullback right now is not dropping below that very strong now support level. So I'm not really bullish on Bitcoin, but I'm not looking for a giant decline here either. All right, so there's your Bitcoin update. Let's look at the 10-year yield. I'd like to kind of jump over to that. As we saw, PFIX, which is the interest rate hedge, it tends to travel with the 10-year Treasury yield. We saw a nice little bounce. It really looked like we were going to have a serious breakdown here. This was the second time it had broken below the support level, and it closed beneath it twice. So we really thought that that was likely the end for interest rates, and we would see a new trading range down here. That did not occur. We ended up seeing this and hold as support. It's moving back up. We have kind of a triple bottom-ish look here. If nothing else, a rounded bottom on what we're getting here. So the expectation here would be a breakout above 3.7. So it appears we're in a rising rate environment, and we need to keep that in mind. PFIX, as I noted earlier, is a way to play the interest rates moving higher. There's also, of course, the inverses of the bonds. There are plenty of inverse bond funds out there, and that could also give you a little leg up on a hedge. So let's go to the dollar. Actually, we'll look at the yield array now that we've looked at those. And you can see that this really is kind of a support zone for all of these interest rates. So we are seeing that bounce come off of this level, which is why we think we're in for a move back up toward these highs that we saw on these rates previously. Now we'll get to the dollar. All right, so with the dollar, it's kind of been, meandering sideways, kind of trickling lower. We've been under the impression we're going to see a lower dollar, that we would get a test down here of 27.25. Looks like the dollar's decided to reverse for now. I'm not really expecting a big rally here in the dollar. I think it's just going to continue in this kind of this trading range, if nothing else, this larger trading range. So we could be on our way up here, but the EMAs are about ready to pose some strong resistance. It has anyway the last two times it's come up to this level. We'll see if we can get that breakout. The PMO is turning up, stochastic's turning up, but we've seen the exact same thing happen before. on this rally. Although I have to say this rally looks a little stronger because this was on filled black candlesticks. Those are bearish formations, bearish gold candlesticks. These are not, these are bullish candlesticks. So maybe we have a better chance this time around. As they say, third time's a charm, and maybe we'll get that breakout based on the fact these indicators are starting to turn. Gold. What is going on with gold? Well, as I noted, gold miners were down, so I figured gold might be down, and sure enough, gold is down. We can see that the rising wedge bearish formation is fulfilling as expected, which is with a breakdown. The reason you see that is this is, when you have a rising trend channel, the lower part, the rising bottoms trend line, is softer in a rising trend channel. But when you have a rising wedge, this is the steeper of the two lines. And the steepest line is the one that is most likely going to be broken. So that's why you look for a rising wedge. You look for this bottom declining bottom or rising bottoms trend line. You look for that to be what fails. We do see the PMO getting ready for a crossover sell signal, not quite there. Stochastics headed lower, discounts are lower. That means that people are less bearish on gold, but ultimately there are discounts on the physical closed-ended fund PHYS. So we do have discounts, so people are still bearish gold, just not as bearish as they were back here. That's what you really want to see is highly bearish activity, because highly bearish activity generally leads to rallies. So we need to get these discounts higher on PHYS. Gold miners. We have under the hood indicators for gold miners. Let me see if I can make this chart a little bigger, just slightly. So we're finally getting a pullback. We got this pullback here. It was like 2 days. It didn't do much of any. I don't even know. I think it was 1 day, because I think we had a lower high on that second OHLC bar, but we had a lower low. So it looks like a more of an aggressive pullback, but really it was 1 day. And so now we're getting the actual pullback, it looks like, to that support level. Gold, if gold is going to continue lower and lose its support, I would look for gold miners to do the same. They have been very resilient because the market itself has been on the rise for a lot of this period. That's helped it. Gold has been rallying strongly. That's helped gold miners. But we're finally starting to see a little bit of problem here with this pullback. But ultimately, when you look under the hood, we needed this pullback, and it didn't damage anything at this point. We'll see what it does after the close today. But we've got an RSI. It's still positive. It's left overbought territory, so that's actually a positive. And you can see that we've got the PMO. It is turning lower here in overbought territory. But again, we need to get these indicators out of overbought territory. OBV is showing clear volume pattern moving to the upside, confirmed the rally. Right now, this is why I'm feeling pretty good about this sector in spite of this current pullback. I think it'll hold the support level, mainly because you can see we still have a lot of fuel to fuel a fire, a rally. We've got 100% of gold miners above their 20 and 50-day EMAs. Every single one of them has price above their 20 and 50-day EMAs. That is hugely positive, obviously, at 100% participation. We have 96%. So there's probably one stock out there that doesn't have price above its 200-day EMA, but everybody else does. Stochastics have turned down, and they are below 80 now. But again, I think this is a good sign, because we do need to see a pullback on gold miners. They've just gotten too overbought. Well, we'll take a quick peek at silver since we can. Silver is on a pullback, probably going to experience what gold is experiencing. Certainly, it looks very similar. Looks also kind of similar to gold miners. This is our strongest level of support. It's got plenty of touches, and this should hold. If this does not hold, then we're looking at a much deeper decline that is on tap. I would say at least to the 50-day EMA. I think it's highly likely because the PMO has topped. We can see that its correlation to gold is very positive right now, and gold is looking weak. So it's going to follow gold. That's what that correlation tells you. So right now they're traveling in line with each other, and I would say that it's probably not going to be a good thing for silver. USO. So energy down today, and I figured a good portion of that would be because of crude oil, and certainly that is the case. We had a nice breakaway gap. We formed what could have been a reverse island, didn't get it. We got a continuation gap is what that looked like, but it's turning out to be more of an exhaustion gap. We got the big move, consolidated, it broke out, and it really looked good because we had a breakout above this level, but it is starting to pull back now. I still think that oil is going to do fairly well. I think energy is still looking fairly strong. The internals certainly do. So we'll be watching to see what happens here on this pullback to support. We didn't end up with a reverse island, so that was a good sign. I thought that we would form this island, and then there was that chance we'd get the gap down. We didn't get a gap down, but we are certainly getting lower prices. It's filled that gap, and that tells me we should at least test this level before a reversal. Possibly the 200-day could be a nice little reversal area. The problem is going to be if price gets this low and it drops below this level, people are going to notice and they're going to want to sell their positions, and we might end up with another trip down to the bottom of this trading range. So oil looking less bullish, looked like a breakout. I was really kind of not counting on it, if you will, but I really was expecting to see a breakout up to 78. It's not too late. This could just be a little bit of a pullback to, continue to digest this rally that we had up to this level, but it's looking a little bit iffy right now. TLT is drifting back down to this support level here at 104. We saw the yield chart. We saw the 10-year yield. We didn't look at the 20 or the 30, but you can tell here with the 20-year yield, it's on the rise. And bonds and yields travel, they have an almost perfect inverse relationship. So if rates are rising, bonds are going to fall. And that's exactly what we're seeing here. We have a big double top formation here on bonds. This is kind of the last ditch effort here to get a reversal. But notice these 4 filled red candlesticks. This is a pretty strong move to the downside. And we've lost the rising trend on Friday. So I would expect a decline that's going to take us down to the 98 level on TLT. And that would be the area that it'll be tested. With the way interest rates and bonds are traveling in trading ranges right now, I'd say that there's a high likelihood that's going to happen. The reversal off of there, we'll make that determination when we get there. But for now, that's what I'd be looking for, is a move down to 98. All right, that covers the market in general. We talked about UNG. Let's go ahead and move into at 9:25 our sector review after my sip of coffee. All right, so we have all of the 11 sectors here on the screen. What we want to pay attention to, for me, first off, is I always look at the PMO and what is it doing. And you can see really as far as PMOs go, industrials looking kind of interesting. Not a lot of upward thrust here on this rally, but certainly we are getting some new momentum. So that is very interesting. XLY is bottoming above its signal line the last time I looked at it, but I think that it has turned back down, that PMO. Let's look real quick. Oh, no, PMO is still rising above the signal line. So consumer discretionary getting stuck here under the 200-day EMA. Makes sense that we're going to get a bit of a pullback. Comm services had a really great rally, hit overhead resistance, and looks like it's going to round off here. PMO still rising though. Financials, I know a lot of people are interested in this area as a rebound area. I personally am not presenting any banks to my diamond subscribers. There have been some bank stocks that look decent, but I'm not going to present something that I'm not going to invest in. And I'm not going to invest in banks right now. I don't trust them. And I really, really don't want to wake up the next morning and see my stock has fallen 70% in a day because of something that happened. I'm not going to put that risk out there to my subscribers, and I'm not going to do it myself. But the financial sector is made up of far more than banks. So there are some opportunities still in there. You can see that the PMO is rising, but you just have to be careful because maybe they're not a bank. But if the banks get pulled down, you can see what happened to the financial sector. And as they say, you don't want to throw the baby out with the bathwater. Well, investors tend to do that all the time. So be very careful if you're in the financial sector right now. Healthcare starting to consolidate its rally, but still looking fairly strong. You can see that materials, this was one that really had piqued my interest on Friday. You can see that the PMO is now in positive territory, so I think that is a good sign. Utilities, PMO is starting to turn over, and on technology, we're actually getting a negative crossover on the PMO. Tech stocks tend to not do as well in a rising rate environment. And as you saw on the yield chart, we are starting to see rising rates. Probably not going to help the tech space. Real estate is leading today, but I don't like what's going on here. This is a rounded top well below the 200-day EMA. That is not something that I want to see. We are seeing the PMO, it is bottoming above its signal line here, but this is the support level down here at 36. So we could see that it could be bouncing here, but I just don't trust it yet because we're not seeing, we're still seeing this kind of rounded look on the price, and that's well below the 200. I'm not saying real estate's not going to do well. I'm just saying that price-wise, it just doesn't look that strong. So where is the strength? Where do we go? That's a great question. Energy was looking really good, but you can see that rising trend is starting to be lost. I would say industrials are actually looking pretty good, and materials are looking pretty good right now. So those are kind of the areas I might want to focus on. We could take a little bit of a peek within financials just because that PMO does look very, very strong right now. So let's dive in. We'll look at financials just for the heck of it to start off. We're going to talk financials. We should look at regional banks, and we have under the hood indicators here. This is why I have a little bit of heartburn. Obviously, we've got a declining trend line here going on. Carl has annotated a trend line on the bottom here, and it is curling down a little bit, right? So this is a bullish falling wedge, but I would caution getting too excited here. And my reasoning is this: the PMO is on a buy signal and it is rising, but price is in a negative divergence. We're just not seeing the kind of action out of price we should if this is what's going on with the PMO. What's going on with the PMO here, guys? Notice how oversold it is. The PMO is an oscillator, and oscillators, well, they have to oscillate. And so what will happen is the PMO, if there's no real trend going on, it's going to just drag itself back up to the zero line because oscillators are going to tend to net neutral. So they'll tend toward the zero line from overbought territory, and they will tend upward from oversold territory. But you really need to pay attention because this may look great, but does price really look, when you look at price, does that really look bullish to you? It really does not look bullish to me. And maybe it's a falling wedge, but that pattern is being, it's stale. The closer you get to the apex of any of these triangle type shapes, wedge type shapes, when you start to get in the tip of those apexes of those triangular type patterns, you're going to automatically break out or break down, right? Because eventually there's nowhere for price to go. It's going to have to break out or break down. And again, it's sort of the same idea. You're going to maybe get the breakout here and the PMO is going to be rising a bit, but is it really a new trend? Is it really a new thrust to the upside? I don't see that here for regional banks. You can also see really, really pathetic participation right now, but they have been very beat down. It might take a while before we get improvement under the surface, but I have to say banks still look very weak to me. I wouldn't get too excited because we're seeing those rising PMOs. Now, financials, I would trust this signal more because what's happening? Price is actually rising. Something's happening here on price. And so the PMO is likely tending towards zero anyway, but it's now moving a lot faster up that direction because we actually have a rising trend on financials. You can see that stochastics are above 80. Participation under the surface is not completely bullish. We like to see a threshold. Our bullish threshold is 50%. So it's sort of our net neutral, if you will. So we have a bullish reading for percent stocks above their 20, but we're not really there regarding stocks above their 50 and their 200. The SCI did have a positive crossover, so that's a good sign for financials, but we can see that the GCI is still not making a big move here. I see this as a sector that is seeing improvement, but I would just caution against going toward the banks. So let's look at industrials more closely. Really in a trading range, granted the PMO did bottom above its signal line and is headed upward. I just don't see a lot of participation here under the surface. Yeah, we've got bullish readings above their 20 and their 200. But I'm not trusting industrials here. Even if we get the move upward, it's in a trading range. It has a very high likelihood of turning back down at that overhead resistance, which is about 3 1/3, maybe 4% away. So you might get a little bit of a bump here, but how long is that going to last? Probably not very long unless we start to really see some improvement in participation under the surface. Materials looked interesting. And like I said, the PMO is now back above zero. Kind of double topish, but we don't have an actual, we don't see prices falling just yet. We did get a silver cross of the 20 and 50-day EMAs. So that's a positive. Stochastics are above 80. That's a positive. And you can see that all of the participation readings here of stocks above their 20, 50, and 200 are all above 50%. So that's a good sign as well. The Silver Cross Index is rising. Now, I would say we're going to go look inside of materials. And I will say on Friday, when I was looking inside the materials industry groups, I didn't see a whole lot of great action there. We know gold miners are a part and metals and miners are a part of materials. And we saw that chart. It looks ready for a pullback. I don't trust materials here. I know it sounds like I don't trust anything in the market, but I guess ultimately we can't. Discretionary, I think, was one I was going to look at for you. Energy. So we had a nice rising trend going on here. Oil was breaking out on Friday. This sector looked just really strong, looked like a place that we would want to move. I'm not so certain just because of what is going on with oil. It's an awfully big pullback. It could just be a move back to support here for energy anyway, back toward this gap support. PMO is still rising. We do have very bullish readings under the surface as far as how many stocks are above their 20, 50, and 200-day EMAs. The golden cross has given us an upside crossover. Those don't occur that often, and it's in oversold territory. The silver cross is rising, but it did start to flatten on Friday. And notice that relative strength is sort of flattened out here as well for energy. But overall, it's in a rising trend. So I think energy still looks good here. It just doesn't look nearly as good as it did Friday because of the big decline in crude oil that was unexpected. And here we have it. So it's changing the look of the energy sector for sure. All right, I think those were the ones I really wanted to go through. If you're interested in seeing all of these charts, they are available to our DP subscribers. I should show you a little bit of what we do over here. So if you come to the homepage, you should be already subscribed to our free newsletter because you are in this trading room. But if you haven't been getting any emails from us, feel free to add your email address to our free list. You'll get notification when we publish our free material. We have 2 reports, the DP Alert, which is our cornerstone report. That's going to do what exactly I did at the beginning of this trading room. It goes through the market. It covers those major charts on Bitcoin, dollar, gold miners. All of that is included in DP Alert. DP Diamonds is for the trader out there. Most of you are traders or you wouldn't be sitting in a trading room. We have a 1.5-hour trading room on Fridays as part of our DecisionPoint Diamond subscription. And you get 10 stock picks per week, with 3 of those being ETFs that are on ETF day. I also do reader requests on Thursdays, so your stock may get looked at in more detail. So come check us out. If you want a free 2-week trial, it's not listed on our homepage, but it is DP trial and the number 2. That is your coupon code. I will pop that into the Q&A right now so that you can get actually, I'm going to pop it into the chat room for you. Coupon code for a free 2-week trial, DP trial and the number 2. Make sure I send this to everybody. So if you're interested in a 2-week trial, welcome you to come check out our material. All right, so let's get ourselves to our industry summary and a quick peek at what is going on in some of these industry groups. We concentrated specifically on energy, industrials, and materials, so we'll look there first. Oil equipment and services, again, we're going to see a lot of these pullbacks going on today based on the fact that crude oil is pulling back. You can see that in integrated oil and gas, but you can see not a lot of these now. Exploration and production, it does look at the rising trend is in jeopardy right now, but certainly plenty of support here. Pipelines also kind of rounding out. And coal, which hasn't been doing well in the energy sector, actually is having a very good day and is in a rising trend. So coal might be an interesting place to go fishing. Financials, I'll just show you the bank chart. They are making a move. They've gapped up. It does look like a breakaway gap. Like I said, certainly something you can consider, but I am not considering anything regarding banks, just simply for the risk factor, like I said earlier. Industrials, we have quite a few industry groups here in industrials. So I'm just going to click through and we'll see if there's anything particularly interesting. Airlines, we're getting the PMO turning up above the signal line. Aerospace stuck below overhead resistance. Building materials having a nice little rally, PMO crossover buy signal. Not much going on with defense. Declining trend for industrial suppliers. Industrial machinery looks almost identical, but we do have a PMO crossover buy signal. Commercial vehicles looking really interesting with a PMO buy signal, kind of a double/triple bottom going on there. Heavy construction still has some work to do with that PMO. Diversified industrials stuck below overhead resistance. Business support services, PMO turning down. Marine transportation looking really interesting. I'd say stochastics topping here is not a good sign, but I certainly like the way the PMO is rising and price holding above the 20 and 50. Waste disposal services looking great. Railroads trying to break out, hasn't had a nice rally, but a big pullback stuck under the 50-day. Truckers not looking so hot, kind of in a trading range. PMO flattening out, stochastics topping. Transportation services, PMO is above the zero line, and you can see rising trend intact so far. Materials, aluminum not doing much, but below the 20-day, but we're seeing an improvement in the PMO. Commodity chemicals getting ready to hit overhead resistance. Containers and packaging in a declining trend, lost the 20-day. This is my problem with materials. The energy industry groups, most of them look a little bit healthier. Especially chemicals doing all right. Mining, as I said, gold miners and mining really having a big pullback right now. And metals certainly not doing great. This is your non-ferrous metals, gold mining, a pullback to the 200. We talked about gold miners correcting. Steel, not looking so great, stuck beneath the 20 and 50, PMO flat, although it is about to give us a buy signal. And finally, paper, not looking so great. So there are a few groups that are looking better, but overall, here's real estate. Remember, it's leading this, the sector is leading today, but look at these charts. Most of them are pretty darn ugly. A lot of the same sort of thing, hitting resistance, getting stuck at resistance, declining trends. So it may be leading today, but there aren't a whole lot of strong areas within real estate. All right, that leaves us about 15 minutes. I do tend to talk a little bit longer than my father for our symbol requests, but I will do my very best. Let's look at questions really quickly here. Looks like all symbol requests at this point. Is TLT a buy at 98? Certainly that's where the big support is, B. But we'll really need to examine what's going to happen to the PMO, RSI and such when it hits that area. Is it going to hold up? Are we going to at least get a pause? It could very well be a great reversal area. We'll want to keep an eye on that for sure, but that is the strongest support level and certainly the level that my eyebrows would start to be raised. Let's see what we can do. Pop through these. All right, I'm not going to go into my big discussion over how we do things here. Most of you are familiar now with RSI and PMO and stochastics. What I do add to my charts is relative strength of the industry group to the S&P, the stock to the S&P, and then the stock to its industry group. So it may be doing well against the S&P, but is it doing well against the group? That's kind of important because you want to find the leadership stocks within those industry groups, and relative strength is a great way to measure that. Planet Labs, nice rising trend. It's gotten above those key moving averages, RSI positive, PMO rising, almost above the zero line, stochastics oscillating above 80. And I like the way that the relative strength lines are going for this stock. I'm not thrilled with what's happening with the industry group in general. We did look at this aerospace industry group when we were flipping through the industry groups, and industrials, some of them are okay, some of them not so much, but what I would say is this one does look strong. I like the look of it. It's moving above those averages. I often will go and look at a 5-minute candlestick chart to determine when to enter or exit. So if I came to this chart and I wanted to buy this, I'm not really at a good buy point because the PMO is still, the 5-minute PMO is in decline. But RSI is positive and has been positive. So you could make a more aggressive entry here based strictly on the fact that RSI is still showing strength, or you could make the determination that you want to wait until the PMO either turns up or has a crossover, because a conservative entry point is when the PMO crosses over and the RSI goes positive. So here was your crossover, but the RSI didn't get positive until right about here. So that would have been your buy point. So right now, not a buy point for PL, but not a bad choice. ETNB, really nice rally here after a decline or a pullback toward this breakout area where we had the big rally. Let me look at its personality. Tends to rally a couple days and then pull back. This was a nice rally. That might be what we're getting ready to see going on here. PMO buy signal looking great. RSI not overbought, which is especially good considering this big 8, almost 9% move today. Certainly relative strength for this stock is doing well. I like the look here. 5-minute chart. Can I get this on a pullback though? Possibly could. PMO, 5-minute PMO falling, RSI positive, but we do have an opportunity here, liking the stock, to get a better entry point. So until that PMO starts to at least pause, I would wait it out and see if I can't get a better entry. And yeah, whether this should be a long or a short-term trade, it is a biotech. I pretty much always consider my biotech positions as short-term trades. They're very volatile. Long-term read on SHCHW. Well, if we're going to talk about a long-term read, first I'll give you a quick short-term read. Nice look on the PMO and stochastics. RSI is still very negative after this big decline. Bullish engulfing candlestick today. But if we're going to talk long-term, we need to look at a weekly chart. And the weekly chart is telling me, no, really, this isn't a long-term trade. The scooter is in the basement. The weekly PMO is oversold, granted, but it is still falling pretty fast. RSI is now above 80, but still looking very weak. So I would say no, I wouldn't be looking at this as a longer-term investment. In the shorter term, I think that it's still highly risky because the RSI is still negative. And while stochastics are rising, the PMO's on a buy signal, relative strength is not looking so great for either the group or for this stock. TRMD. Yeah, and we looked a little bit at marine transportation when we went through these, and I liked the marine transportation group chart. Really nice breakout here, PMO, stochastics, relative strength, RSI not overbought. These are all excellent, excellent. I do notice this is rather parabolic on the rally. So if you're in it, a trailing stop might not be a bad idea. If you're not in it, getting in with a trailing stop might be worthwhile, because if this does fail to continue on this more almost vertical run, it will fail very quickly. So you want to make sure those stops are in play. But this is a nice breakout from a trading range. I guess my one thing about this, it's a pattern that we don't talk about very often, but when you get a little trading range and then you get a breakout and it happens off of a rising trend, a lot of times you're going to get a false breakout here. I know that seems kind of strange, but what will happen is you get what Carl calls a pig's ear. A pig's ear. Almost you can see the top of the pig's head here, right? And then you get the break up here, and then the pop comes out, and that becomes your ear. So these are bearish formations. So we do need to be careful between that parabolic move to the upside and the fact that it does have this sort of pig's ear look to it. But ultimately, I think this breakout's going to be successful. I think that you're going to end up maybe with a pullback toward this level of prior overhead resistance with a then softer rising trend. But I think this one does look really good coming in to today for sure. CEIX, certainly not doing much, but not doing badly. You can see that it's leadership within its group. The group hasn't been doing much, but it's certainly been showing some leadership. RSI positive. It's not a stock I would be really interested in entering, just because it doesn't seem to have a whole lot of oomph behind this rally, and it is getting very close to overhead resistance. I certainly see it moving higher simply because these indicators are set up very nicely. Your upside potential before hitting overhead resistance. is about 5%. So a little tight, little 2.5% stop, a 5% gain, if that's something, I know for a day trader, that would be certainly a win. Short-term trader, a 5% gain, not a bad thing. Certainly could move higher than that because the stronger resistance levels are up here. I like the stock. I think it looks good for a hold. You could make a case for an entry here. I just don't know if we're going to get that much action out of it. I suppose, like I said, 5% gain, not a bad look. Arlo pulling back after a breakout. I do not like the PMO here. Stochastics looking good. This does look like it's a pullback after a really strong rally. But I wouldn't want to get involved because the PMO is overbought and it has a sell signal. So relook at this one when it hits this support level. You can see it's a very strong level and it should hold there. 20-day EMA should hold there. That might offer a better entry on this one, but right now I think you're taking a lot of risk. I would hold it. I think I would keep it. There's still a lot of upside potential. More marine transportation, not nearly as strong as that last one we looked at. You can see that it is showing some relative strength against its group, so that's a good sign. Price hasn't gotten above that 20-day EMA, and we do have strong overhead resistance right along here. PMO doing what it should. Stochastics are still negative. I think this looks good. It's early because you don't have the crossover. You don't have the positive RSI yet. It's not so, I usually like to wait a little bit longer, at least get those stochastics in positive territory, but it does look like it's on the way to doing what it should. And those marine transports, that last one looked pretty good as well. Pan W, breakout, fell back as trading back beneath that overhead resistance. Well, it's still technically above price-wise, above that level. PMO flat, really nice outperformance. I think your problem here is with the group. The group here, telecom, is really struggling. So while we're getting some great outperformance here, it's a little bit muted because the group isn't doing quite so well. Everything going right here, a nice little breakout. I like Pan W here. I think the only issue it has is just being in a rather weak group. Boeing, this is another, let's see, aerospace. So we kind of went into that area. Range bound, possible reverse island on tap, but that PMO, I don't think so. I don't think I would be opening a new position here. I would have my stop. Yeah, my stop would be down here below this level. It's right about 6%, 6.3%. Upside is at 8%. So your risk reward is a little bit iffy, but this is the big problem, is that PMO. I would not want to be involved in it, but I do see this as a hold. Nice look for Bank of America, but as I said, straight out the gate, I'm not suggesting banks at this point. But if we go strictly by the technicals here, technicals look very, very good here for Bank of America. You have the 50-day is the next level of overhead resistance. And it does kind of coincide with this level of overhead resistance. I could see things getting hung up here very soon. Yeah, very soon. So you're enjoying a rally right now, but I think it's going to hit that 50. It's going to hit this overhead resistance, and the growth will be stunted. I don't know that we're going to see much more upside after that. And like I said, while the technicals look strong here, the group itself starting to show some outperformance, I think the risk level there is, well, it's too high for me. All right, we have positive RSI, PMO kind of pulling back a little bit. Stochastics below 80 now. Relative strength is okay. Looks like, you got the breakout. It's starting that pullback. It looks like it's ready to pop back upward. And everything looks pretty good here. So I have to say Comcast looks pretty good here on a pullback and a possible reversal at that point. Stochastics, though, being below 80, it looks like they're trying to move back up. So rounding off just a little bit, but I think I'd like this one on the 200-day EMA. I think that could be a real interesting entry on it. All right, last one, I'm afraid. Actually, I'm going to do Google after this one. We didn't look at any of those large mega cap stocks. Pull back, starting to move back higher. I like this look. PMO rising. Relative strength's a little weird here for pharma and for this particular stock, but overall, I'm liking the look. I like this one on this pullback and what looks like a new move to the upside. And entry. The entry is not here. PMO just 5-minute PMO just moved below the 0 line. I think you're going to get a better entry than where we're at now. And quickly we'll look at Google, and then that is that. All right, hit overhead resistance, and it is starting to pull back, and the PMO is topping for like the third time here. Third time a charm? Probably. We're losing the rising trend right now. Maybe we'll luck out. This is going to be a reverse island. But ultimately, I don't know. I might be taking some profit here and waiting this one out with the market looking a little bit weak. All right, that concludes it. We thank you very much for joining us in our free trading room today and hope you join us next week. I did put that coupon code in the chat box to get a 2-week free trial to DecisionPoint. The coupon code is DPTrial2. And with that, I'm going to sign off and wish you all good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.